All right, let's talk about the lemons hiding in Florida's housing market. Florida might be paradise with palm trees and sunshine, but not every home here is a slice of heaven. Some properties look incredible online, swaying palms, shiny quartz countertops, a pool glistening in the sun, and they're priced like a dream. But ever wonder why that gorgeous home with all the upgrades is so affordable? Here's the truth. There are homes in Florida that I would not buy, not for myself and not for my clients. And definitely not without understanding the red flags first. I've toured hundreds of properties in the Sunshine State, and I've learned that behind some picture-perfect listings are deal breakers that can cost you thousands. Today, I'm breaking down the 5 types of Florida homes that I stay far, far away from and how you can spot them in under a minute. If you can recognize these warning signs early, you'll save yourself a world of stress and tens of thousands of dollars in mistakes. Stick around because at the end of this video, I'm also sharing my free Florida homebuyer red flag checklist, and it's the same 21-point checklist that I give my own clients to help them avoid these pitfalls. Trust me, you'll want this in hand before you buy a home in Florida, so let's go ahead and dive in. Number 1 is the looks great online home sitting in the wrong spot. You can remodel a kitchen, but you can't remodel your surroundings. In Florida, location isn't just about a nice view or a short drive to the beach, it's also about livability. A beautiful house in the wrong spot is a nightmare in disguise. Let's start with one huge factor: noise. Florida's developed areas are threaded with airports, train lines, and busy highways. That home near I-95 or US 1 might seem quiet during a midday tour, but at rush hour, it's like having a racetrack next to your house. I once showed a gorgeous renovated house near the train tracks in West Palm. The online photos were stunning, but during our showing, a Brightline train came barreling by. Conversation stopped and the windows shook, and my client just took a look at me and said, "Nope, we're done here." Now that house's beauty didn't matter at all anymore. The location absolutely killed it. Then there's the issue of flood-prone streets and poor drainage. A home might sit on a nice sunny day without a puddle in sight, but one summer thunderstorm and suddenly you're kayaking to your car in the driveway. Florida is flat and low-lying, and some streets turn into rivers with a heavy rain. I'm talking knee-deep water just from one afternoon downpour. If a neighborhood has an old drainage system or sits in a bowl, you can go from dry to drenched in minutes. Beyond the hassle of water in the streets, think about what that does to your cars, your lawns, and your general peace of mind. How do you protect yourself? Well, here are a few quick steps to spot a great house in the wrong location before you get attached. Drive the area at rush hour. See and hear what the neighborhood is like during peak traffic. Is there a highway off-ramp that backs up past your potential front door? Fire station or a hospital nearby with sirens blaring all hours? Experiencing it firsthand at busy times will tell you exactly what you need to know and what the photos won't tell you. Pull up the FEMA flood maps. Don't just rely on a sunny day visit. Check if the home sits in a low spot or a flood zone. FEMA's latest flood map updates in 2024 put tens of thousands of additional Florida homes into high-risk flood areas. If that house is in or near one of those zones, that's a big red flag and likely adds an expensive insurance requirement. Talk to the neighbors. Neighbors will often be blunt about local issues. Ask if the streets flood in heavy rain or if there's been a noise problem in the neighborhood. They might tell you, yeah, every summer we have water up to the mailbox, or trash pickup comes at 5 a.m. and sounds like a war zone. Now, these candid insights are absolute gold. Check proximity to nuisances. On a map, note how close the house is to airports. Airplane flight paths can bring constant noise. Train tracks, high-speed trains, or freight trains at night, and even things like nightclubs or busy plazas. A home could be lovely, but if it backs up to a bar with a loud outdoor patio, you'll be listening to karaoke at night instead of crickets. Also look for drainage canals or retention ponds. If heavy rains come, will the water have somewhere to go, or is the street the drainage? Bottom line, if something feels off on day one, it will feel way more off after you've lived there for 6 months. Location problems don't go away, and when it comes time for you to sell, the next buyer will notice them too. Number 2, the waterfront dream that's actually a money pit. Waterfront living. It's the Florida fantasy, right? Stepping outside to ocean breezes, having your morning coffee and a view of the water, maybe a boat parked in the back. I won't lie, those views can be absolutely amazing, but I also caution buyers that those views can come with a brutal reality. A waterfront home can run into bottomless money pit problems if you don't go in with your eyes open. First up, flood zones and insurance. If you're on the water, you're almost certainly in a flood zone, and lately those zones have been expanding. FEMA's 2024 flood map updates pushed massive numbers of homes into high-risk categories. In South Florida alone, about 139,000 more structures were added into the high-risk flood zones. Translation, you could be required to carry flood insurance now, even if the owners previous to you didn't. And flood insurance premiums have been skyrocketing under new federal risk ratings. One recent analysis showed the median Florida flood policy nearly doubled in price, from $800 to $1,400 per year. In some coastal areas, I've seen flood premiums jump 50% or more year over year, so that affordable waterfront cottage might carry an extra $5,000 a year in insurance that wasn't obvious at first. Always factor that in. Second is seawalls and drainage. Owning a slice of land that touches the water means that you might be responsible for the seawall or bulkhead that keeps land and water in their proper places. And seawalls are expensive structures to maintain. In South Florida, replacing a seawall can cost anywhere from $80,000 to $150,000 or more depending on the length and engineering needed. I've seen buyers close on picturesque canal front homes only to learn during the first king tide that the seawall was literally crumbling below the waterline. Cracks, erosion, even sinkholes can form if the seawall fails, and if you don't repair it, not only does your property start disappearing into the water, but good luck getting insurance or selling the home later. Also, consider the drainage on the property itself. Does the yard slope towards the house, or are there French drains or pump systems? Low-lying waterfront yards can become swamps after heavy rains if not properly drained. One hint, if the listing mentions new landscaping, make sure it's not hiding water damage or salt burn from previous floods. Third, salt air is a stealth destroyer. The closer you live to salt water, the more maintenance that you'll have on everything. The salt in the air is corrosive. It will chew up your AC unit coils, it will rust your fixtures, your outdoor fans, blister your exterior paint, and corrode aluminum window frames and sliding doors. You won't notice it on a short walkthrough, but year after year that salt is breaking things down. Even your car will get a fine layer of salt on it if you park it outside near the coast. It's a hidden tax of waterfront life that inland homeowners don't pay as much. Budget for more frequent painting, stainless steel hardware upgrades, and replacing appliances a bit sooner than usual. So how do you keep that waterfront dream from becoming a nightmare? Before you fall in love with that view, do your homework. Check the flood risk and insurance costs. Pull up the FEMA flood map and the property's location. FEMA's online flood map service center can show you exactly where the flood zones are. Also, ask the seller if there's any elevation certificate that they have. This document shows how high the home is built relative to the base flood elevation. It's a critical document for determining flood insurance rates. If the home is below the expected flood level for a major storm, know that you'll pay more and you might want to invest in some flood proofing or elevation changes. Don't forget to get a quote on flood insurance before you commit. If FEMA has reclassified the area as high risk, you could be facing mandatory flood coverage and pricey premiums as a result. Better to know now than to be surprised later. Inspect the seawall if there is one. This is a non-negotiable. Have a marine or structural engineer look at the seawall during your inspection period. They should check for cracks, bowing, erosion at the base, or sinkholes forming behind it on the land side. If the seawall fails, you could literally lose your backyard. If there's no seawall, like on a lake or a natural shoreline, assess the shoreline erosion. Has it been receding? Are neighbors' homes fortified with rocks or retaining walls? Shoreline erosion can be just as costly to address. Talk to neighbors about water levels. Neighbors are a great source of truth about waterfront properties. Ask them how high the water gets during king tides or after a heavy rainstorm. They might say, last September the canal topped its banks and came into the yards. That's crucial intel. Also ask if the street floods. Even when the home stays dry, sometimes the home is elevated, but the access roads turn into ponds, which is its own headache. Neighbors will also know if the seawall has ever been repaired or if nearby properties had major flood intrusions. Salt-proof your purchase. Plan for mitigation of salt damage. It might mean ensuring that your AC compressor is located in a more sheltered spot, budgeting for a whole house exterior rinse every so often, or using higher grade materials materials for any improvements. If the home has a metal roof, find out if the salt spray has corroded the fasteners. Little things like that will save you a lot of maintenance down the road. The takeaway here is that beautiful views are wonderful. They're why we love Florida, but that postcard perfect waterfront home isn't worth drowning in repair bills or surprise insurance costs. Go in informed and you can enjoy the ocean and stay dry financially. Number 3 is condos with hidden time bombs. All right, condo buyers, this one is for you. Florida has a condo crisis flying under the radar for many buyers, and if you're not careful, you could walk straight into a financial nightmare. You might see a high-rise condo with gorgeous oceanfront views, a pool, and a low monthly HOA fee and think, what a steal. But after the Surfside condo collapse tragedy in 2021, Florida passed tough new condo safety laws. These laws require milestone structural inspections and fully funded reserves for older condo buildings. Great for safety in the long run, yes, but in the short term, it's bad news for your wallet if the building hasn't been keeping up with maintenance. Here's the deal. Thousands of older condo buildings, especially along the coast, where salt and time have done their damage, are now facing massive repair bills to meet the new requirements. When a condo association doesn't have enough money saved, which is common since many of these fees have been kept low deferring maintenance, the only way to pay for big repairs is a special assessment, a one-time bill to each owner for their share of the project. And we're not talking small payments here. I'm talking $20,000 to $50,000, sometimes 6 figures per unit in the worst cases. Imagine buying a condo and moving in happy, and then a month later you get hit with a $50,000 bill because the building's concrete needs restoration or the elevator system is shot. It's happening all over Florida right now. I had a client who bought a condo in Fort Lauderdale, a nice 2-bedroom, seemingly well-maintained building. They thought they scored a deal because prices in the building were a bit lower than the competitors, and that should have been a clue. A few years later, she contacted me to help sell her condo. 2 weeks after listing, the association announced a $120,000 special assessment, if you can believe it, for each unit to cover the concrete restoration and structural work. $120,000. That was about 30% of the price that she paid for the condo. A total nightmare. They were essentially stuck with 2 options. Pay the assessment, taking a loan out in their case, because not many people have a spare $120,000 lying around, or sell the unit and likely at a loss, because really who wants to buy into that kind of a situation? She ended up pulling her listing because it was just not financially feasible for her to sell and finance the assessment. This is what I mean by a hidden time bomb. The building's problems may not have been obvious when touring the unit. The lobby looked nice, the unit itself was updated, but deep down, the structure was a ticking clock of deferred maintenance. So how can you protect yourself if you're eyeing a condo? Here's what you do. Before you even write an offer or put down a deposit, request the condo's milestone inspection report and the reserve study, called the CERS. Under Florida law, condos of a certain age or height must undergo a milestone inspection by an engineer or architect to assess structural components. They also have to do a structural integrity reserve study, SIRS, which basically says how much money needs to be in reserves to fix things like the roof, the structure, electrical, plumbing, etc. over the next 10 to 30 years. Ask for these documents up front. If the seller or the association balks or claims that they don't have them, that's a big red flag. Either the building is out of compliance or they're hiding something. When you get them, read them or have your inspector read them. For example, concrete spiraling noted in the garage supports, or waterproofing of the pool deck failing. These will translate to future projects and costs. Also see what the reserve study says versus what the reserves actually are. Florida's new law basically ended the practice of waiving reserves. By 2025, most major components must have full reserves. If the condo has, say, $100,000 in reserves, but needs $1 million by next year, guess where that $900,000 difference is coming from? The owners, via special assessments or increased fees. Review the budget, the reserves, and any pending special assessment information that you can get. Get the last 2 to 3 years of meeting minutes or at least any notices of pending assessments. Often big assessments are discussed or voted on in board meetings before they hit. You may spot lines like, board is considering a special assessment in 2025 for roof replacement, or engineer report expected, likely significant repairs needed. If you can, talk to the condo association or a board member. Ask if any major projects are on the horizon. It's better to buy into a building that already did the big repairs, even if that means the unit price is a little bit higher, than to buy in right before the hammer drops. Check the insurance and the maintenance history. Florida condos also get slammed by rising insurance premiums, just like houses. If the building's insurance was recently non-renewed or jumped in cost, that can force higher fees or assessments. Also, what's the track record? If the listing boasts low HOA fees, dig into why they're low. Sometimes it's because the board hasn't been funding reserves properly, which is unsustainable. A fiscally healthy condo usually has moderate fees that include contributions to reserves. Extremely low fees probably means they're underfunded. If you can't get the info, walk away. Here's a hard rule. If the seller or the association won't provide the documents before you're committed, consider that your answer to walk. In Florida, you typically have a condo document review period after going under contract, during which you can cancel. Don't treat that lightly, use it. If the numbers don't add up or you get stonewalled, it's far better to walk away than to walk into a six-figure liability. Condos can still be fantastic. They offer convenience and often amenities homeowners can't afford alone. And not every condo is in crisis. Many buildings are well run with solid reserves. The key is to do your due diligence. Focus on the building's health, not just the unit's granite countertops. And I always tell my condo buyers, you're not just buying the unit, you're buying into a tiny share of an entire building. Make sure that that building isn't a money pit. Financially healthy condo equals a great investment, and a condo with hidden cost time bombs equals run for the hills, or at least be fully informed before moving forward. Number 4 is flipped homes hiding major system issues. You've seen them on Instagram and HGTV, the sexy flipped homes with new flooring, trendy light fixtures, and staged furniture that makes you want to move in tomorrow. In Florida, we get all kinds of investor flippers because the market is hot, but some of those quick flips are ticking time bombs wrapped in shiplap and quartz. New paint and fresh decor can hide major system problems, especially in older homes. The flipper's goal is to often wow you enough that you'll overlook the less glamorous stuff, but don't fall for it. Here's what I always say to watch out for in a flip, or any renovated home for that matter. Cast iron plumbing, pre-1975 homes. If the house was built before the mid-1970s, chances are that it has original cast iron pipes. Cast iron was great in its day, but after 50 years, those pipes are often corroding from the inside out. They can crack, clog with rust, collapse entirely underneath the slab, and replacing them means jackhammering out your floors, tunneling under the house, and it can easily run $30,000 to $50,000, and I've seen that even higher in larger homes. A flip may boast new kitchen and bathrooms, but did they replace the pipes or just the fixtures? Many flippers will do cosmetic updates and leave old plumbing because ripping out cast iron is expensive and it's not visible. One clue is low water pressure or slow drains. During your showing, run all the faucets and see. Also check if there are multiple patch jobs on the sewer line. A camera sewer scope can tell you this. If you suspect cast iron and it wasn't replaced, assume that you'll have to address it eventually. Florida even has class action lawsuits about cast iron pipes because so many homes have failures. Don't ignore it. Polybutylene plumbing from the mid-1980s to the mid-1990s. Polybutylene or PB pipes were cheap plastic water pipes used in a lot of homes until about 1995. They had a bad habit of bursting without warning, and many insurance companies refuse to insure a home with PB pipes unless they're replaced. They're usually gray plastic and often found in attics or crawl spaces or connecting to the water heaters. If a flipper didn't replumb a house that has PB, you'll want to factor in a full replumb job soon, roughly $5,000 to $15,000 depending on the size of the home. It's not as invasive as cast iron replacement. Since polybutylene are supply lines, you can often run new PEX through the walls with minimum damage, but it's still a cost. Look under sinks for gray plastic pipes or ask explicitly if the home has polybutylene. If the seller gives you a blank stare, have your inspector verify. Chinese drywall used in the 2005 to 2009 era of construction. This was more of a niche issue, but worth mentioning because Florida was ground zero for it. After the mid-2000s hurricanes, a lot of drywall was imported from China and it turned out to emit corrosive sulfur gases. If a home was built or heavily remodeled around 2006 to 2008, there's a chance that it had this defective drywall. The tall tale signs are a strong sulfur smell, rotten egg type smell, and metal surfaces, especially copper wires, AC coils, and refrigerator tubing, turning black and powdery due to the off gases of sulfur. It also can cause health issues, respiratory problems, and headaches. Most of the Chinese drywall has been remodeled by now, but it's still worth considering and being watchful for. If you smell sulfur or see odd corrosion on copper pipes in a 2000s home, that's a giant red flag. Replacing the drywall and wiring in a house is a massive undertaking, tens of thousands of dollars, so don't take it lightly. The good news is you'll often smell it as soon as you walk in on a hot, humid day, because heat and humidity make the emissions worse. Trust your nose. No deal is worth living in a toxic house. Outdated or unsafe electrical panels. Certain old electrical panels are known fire hazards and are uninsurable. In Florida, two notorious brands, Federal Pacific FPE, Stab Lock panels, and Zinsco panels, mostly found in homes in the mid-1960s to the mid-1980s. They might still function electrically, but they have a history of breakers not tripping properly, which can lead to fires. Almost every insurance company here will require those to be replaced to bind a policy. Replacement runs around $1,500 to $3,000 for a typical panel. If the home inspection reveals one of those panels or any panel in terrible shape, demand replacement or budget it in. A fresh coat of paint in the living room doesn't matter if the electrical system is a hazard. Also watch for aluminum branch wiring, common in the late 1960s homes. Another insurance red flag. It can be remediated, but it should be disclosed. A flip should have ideally addressed these issues, but many don't because new cabinets are sexier than new breaker boxes when selling a house. I once had a client come to me after learning this the hard way. He and his wife had purchased what they thought was the super cute vacation home. Unfortunately, it was the classic lipstick on a pig scenario. Their inspector was a fly-by-night guy who glossed over the serious issues. Within a year, the house was riddled with problems. By the time we listed it for sale, they were staring down six figures in repairs, mandatory disclosures, and a whole lot of stress. We eventually got it sold, but not without plenty of heartache and unrecovered funds invested into the home. So here's your rule of thumb with any renovated or older home. Don't trust new paint, trust inspections. In Florida, I recommend ordering the Florida 5 inspections on any house you're serious about getting, flipped or not. General home inspection, a thorough top to bottom by a licensed inspector who checks structural elements, roof, HVAC, plumbing, electrical, etc. This is standard, but make sure that you use someone detail oriented, and you can ask me for recommendations. A 4-point inspection. This is a specific report required by insurers for older homes. It focuses on the 4 major systems, the roof, the electrical, the plumbing, and the HVAC. Even if your general inspection covers these, the 4-point will put it into the format the insurance companies want. It will flag things like an old roof or problematic electrical panels that could affect insurability. If a house can't get insurance, then you don't want to be stuck buying it without major concessions. A wind mitigation report. In hurricane-prone Florida, a wind mitigation inspection is key. It looks for how wind resistant a home is. Roof tie downs, window protection, door reinforcements, etc. A newer flip might have a new roof or impact windows, big plus, but get the report to see what credits you'll earn and to see what is still needed. If the flip just put lipstick on the front of the house and left an old 1990s roof, that's a problem. Wind mitigation can save you money on insurance and also give you peace of mind about storm safety. Sewer scope. This is a video inspection of the sewer lines and the drain lines under the house. It's not part of a standard home inspection. You usually hire a plumber or a specialized company. They'll send a camera down the main sewer cleanout to visually inspect for breaks, blockages, root intrusions, collapsed pipes, etc. This is how you catch cast iron issues or clogs before they become backups in your home. For maybe $300, this inspection can literally save you $30,000 by revealing a bad sewer line during your inspection period. If the seller won't let you do it, that's suspicious. In a flip, if they replace the plumbing, great, ask for documentation. If not, definitely scope it. A WDO inspection, or a wood destroying organism inspection, is basically a termite and pest inspection. Florida is bug heaven. We have subterranean termites, drywood termites, wood rot, you name it. It's usually under $150, and if termites are found, you can have the seller treat it or credit you. If a house has severe undisclosed termite damage, you might reconsider the deal altogether. Those 5 reports will arm you with the truth. If a renovated home passes these with only minor issues, fantastic. You likely have a winner that's all shiny and has solid fundamentals. If not, better to know before you sign on the dotted line. A flip done the right way can be a great buy. You get new finishes and updated systems. A flip done in the wrong way, cutting corners on the invisible stuff, can lead you with 5-figure headaches down the road. Be the savvy buyer who checks behind the fresh drywall and doesn't fall in love with the staging. Number 5 is homes that can't get or afford insurance. Last, but absolutely not least, is the insurance situation in Florida. It's changing fast and it's catching a lot of people off guard. Here's the context. Florida has seen home insurance companies go bankrupt or leave. Premiums have shot through the roof, and the state's insurer of last resort, which is Citizens, has ballooned. In the past 5 years alone, average property insurance premiums in Florida have climbed by over 70%. We now have the most expensive homeowners insurance in the nation, averaging around $11,000 per year per policy. And that's if you can get coverage on a given home. Why does this matter when you're home shopping? Because that affordable house with the older roof or the quirky wiring could come with a $12,000 to $20,000 annual insurance bill. Or worse, no insurance offer from any standard carriers. If you're getting a mortgage, you must have insurance. So a house that can't get insured is essentially unfinanceable. You'd be stuck paying cash and then maybe using surplus or state plans at a high cost. Even if you're paying cash, do you really want a home that you can't properly insure? One lightning strike or a hurricane and an uninsured home can bankrupt you. So this is serious stuff. Insurance companies in Florida have gotten extremely picky about the homes they'll cover, and they want newer roofs, modern electrical and plumbing, and documented wind mitigation features. Here are some specific things that can make a home uninsurable or very costly to insure. Old roofs. Many insurers won't write a new policy on a shingle roof older than 15 years, and some cut off at even 10 years if it's not in perfect shape. Tile and metal roofs get a bit more leeway, but if it's over 20 to 25 years, it's a problem. If the house you love has an old roof, you might be looking at getting it replaced immediately just to get insurance. That's a big extra expense, $15,000 to $30,000 plus to factor in. Citizens, which is the state-backed insurer of last resort, will insure older roofs, but even they have stricter requirements and are raising rates. They got approval in 2025 for the average increases of up to 14% on primary homes, and Citizens isn't cheap either. Old or unsafe electrical and plumbing. Remember those panels and pipes we discussed? If a home has known issues like a Federal Pacific panel or polybutylene plumbing, many insurers will simply just say no thanks, or they'll require you to replace it within 30 days of binding a policy. Same with things like hurricane straps on the roof trusses. They want to see updates. Essentially, insurers are trying to minimize risk, so they favor homes that have been brought up to current codes, or close to it. If you're eyeing a charming 1950s cottage that still has 1950s wiring and no window protections, expect only a couple carriers to even quote it, and they'll probably charge you accordingly. Location and build factors. A home right on the coast or in a high flood area, or of unconventional construction like a post and pier foundation, or older wood frames in a floodplain will be even harder to insure. Even things like a previous sinkhole claim, common in parts of Florida, can make insurance unavailable from normal companies. These problem homes often end up in Citizens, which, as I said, is the state insurer of last resort, but even Citizens has its own rules. For example, as of 2025, many Citizens policyholders are now required to carry flood insurance if the home is in a flood zone due to a new law. And Citizens is trying to depopulate, which is move people into private insurers and raising rates, so it's not a long-term clutch to rely on blindly. So what do you do to avoid buying a house that sends your insurance agent into a nervous breakdown? Here are a few tips. Get a 4-point inspection before you buy or as part of the home inspection. As mentioned, a 4-point will evaluate the age and condition of the roof, the HVAC, the electrical, and the plumbing. This is exactly what an underwriter will look at. If the 4-point report comes back saying electrical panel is original, 1965, plumbing is original with past leaks, roof has 3 layers of shingles from 1998, you know you're in trouble with insurance. You can then negotiate fixes with the seller or decide this home is not worth it. Better to know early. Talk to your insurance agent before committing. Insurance quotes in Florida are often shockingly high, and they vary house by house. Provide your agent with the address and as much information as possible. Year built, roof year, and any updates during your inspection period. I do this for my buyers all the time. Sometimes we get back quotes like $12,000 per year with one carrier and others decline to quote. That's important to know. It can factor into your budget hugely. Occasionally, the agent might say, we can't find a private insurer for this one, only Citizens will carry you at X cost. If that cost is astronomical or coverage is limited, you might reconsider the purchase or push the seller to replace that 30-year-old roof as a condition of the sale. Don't wait until closing to figure out your insurance. Use the My Safe Home Florida program if you qualify. Here's a silver lining in this wild insurance mess. Florida reinstated and refunded the My Safe Florida Home program in recent years. This program provides free wind mitigation inspections and offers grants up to $10,000 for hardening your home against storms. Things like impact windows, hurricane shutters, new fortified garage doors, roof strapping, etc. Essentially, the state will help you upgrade the older features to make the home safer and therefore insurable with lower premiums. As of 2025, the program has hundreds of millions in funding and is prioritizing grants for low and moderate income homeowners, with up to $10,000 for those who qualify and a 2-to-1 matching grant for moderate income, meaning if you put $5,000 in, they'll give you $10,000. If the home you love needs storm improvements, look into this program right away. It can save you a lot, and once the upgrades are done, you can rerun your insurance quotes and often see a huge savings. Many carriers give discounts for new things like new roofs, secondary water barriers, and opening protections. Some won't even insure without them in high-risk regions. Lastly, budget realistically for insurance as part of homeownership in Florida. I've seen folks stretch their budget just to buy the home, only to be stunned when a $15,000 insurance bill hits. That can wreck your monthly payment calculations and even affect resale value. Future buyers will consider the cost to carry this home. If a home is borderline on insurability, also consider what happens in the future. If laws change or if another insurer pulls out, could you be left with no affordable options? This is the new reality here, and the smartest home buyers are the ones who factor in insurance into the affordability of the home from day one. The good news is that Florida is working on reforms to stabilize this, and new companies are entering the market. But for now, be cautious and informed. The types of properties I personally avoid are: number 1, great house, wrong location. If the surroundings are bad, with constant noise, floods, or environmental issues, I'm out. You can change a house, but you can't change the neighborhood. Number 2 is waterfront homes with high risk and hidden costs. Love the water, but I won't touch a waterfront property that isn't thoroughly vetted for flood risk, seawall condition, and maintenance costs. A dream view isn't worth a nightmare budget. Number 3 is condos with looming special assessments. A cheap condo in a poorly maintained building is a hard pass. I look for financially healthy associations, otherwise you're buying a liability. Number 4 is renovation flips with old bones. If the core systems, including plumbing, electric, and foundation, are suspect or outdated, I don't care how new the kitchen is. I'd rather buy a slightly uglier house that's structurally sound than a pretty one hiding problems. And number 5, anything uninsurable or insanely costly to insure. If a home doesn't meet basic insurability standards or would blow up my monthly expenses due to insurance, it's not truly affordable. I advise my clients to think the same way. Florida's market is still full of amazing opportunities. I don't want to scare you off. I want to arm you with knowledge. The smartest buyers don't run from risk. They understand it and mitigate it. When you know what to look for, you can snag that Florida dream home without stepping on a landmine. Before you make your next move, do yourself a favor and grab my free Florida Homebuyer Red Flag Checklist. It's linked in the description and pinned in the comments. It's the same 21-point checklist that I use every day to evaluate properties, and it will help you spot the deal killers and red flags we talked about, plus a few more. It might save you thousands and a ton of headaches. I'm Joel Poulin, Palm Beach real estate broker. My mission is to help you buy smart, live better, and love where you live. Thanks for sticking with me through these crucial tips. If you found this helpful, give it a thumbs up and subscribe for more insider real estate guides. Good luck out there, stay informed, and I'll see you in the next one.